a small amount of money today invested in the right things can set you up in ways that you can't even fathom. The transition that's about to happen with digital assets, if you're invested in the right things, is going to completely change people's lives. Sometimes for the better, sometimes for the worse. There's an opportunity at hand now that's not going to exist. I do not know how to impress upon you. This opportunity will not come around for another 200, 500,000 years for how the currency system and everything is changing right now without you even realizing it.
Yo, it's your boy. It's Phil Wham Bam Benamino. It's another Wham Bam Wednesday, baby. You know the show about ordinary people who've done extraordinary things. And as always, the first thing we're going to ask, give us some love, man. Subscribe. Click the link button down below. You know, it's free. It doesn't cost you anything. Just a little bit of effort. Just hit that button right there so we can continue to bring you these awesome guests. You know what? Today, I got somebody special in the house. I've gotten so many calls, so many people asking me, hey, Phil, what are you doing with crypto? What's going on with crypto? Tell me about crypto. You know what? Your boy Wham Bam, I'm not really a crypto genius. So I thought I'd bring one in today. We got Jake Claver in the house. Good morning, Jake. How are you?
Morning. Appreciate you having me, brother.
Absolutely, man. Really happy to have you here. And, you know, I'm just going to get right into it.
Okay.
Because, you know, we have so many young people. Crypto, everybody hears the word crypto, but a lot of people don't understand it.
Yep.
Give us the rundown. Give us the kid it down, dumb it down to us so all people that are listening can actually understand what crypto really is.
It's just a distributed ledger. So what that really means at its core is it's just accounting. It allows all the people that are participating, sending money from one another to understand who got what when. At its core, that's what it is.
Right.
And now there's a bunch of other stuff that you can build on top of that with smart contracts for different execution based on constraints around a transaction. People think about buying a home. There's a lot of parties that are involved with that, right?
Sure.
So they all want to make sure that things are legit, that the money's where it's supposed to be when it's supposed to be there. And it just makes things a lot more efficient and faster to be able to transact with people 24/7, 365. You don't have to worry on the bank to be the intermediary and tell you when you can and can't send money. If you want to do something on the weekend, you can do it. If it's over past their banking hours, you can do it. That's why a lot of people like crypto. It gives you the freedom.
So it's more getting the money to you quicker.
Yes.
Right on time. So it's like a wire if you're dealing with the bank, but when the banks are closed, you can't get that wire.
Right.
So it's an opportunity to be able to do that. Now, there's so many different coins out there. There's so many different crypto.
Yeah.
I mean, what is it? How do you define what's good and what's bad? And how do you determine when you're looking into these things, hey, this is something good and I would stay away from this? Well, I mean, it's not like the stock market, but
no.
people are treating it like the stock market, right? Everybody's trying to make their money.
It's speculative. All of it's speculative right now. There's really not a whole lot of utility. There will be in the future, right? And so that's where I focus my time, is figuring out which of these digital assets are actually going to be used and for what purpose. And so, like I talked about, it creates transactions that are more efficient. So you could think of your paycheck. There's a thing out there called ZBEC that allows you to stream payments up to the hour if you were working. So you wouldn't get paid every 2 weeks. You get paid up to the hour. And the faster money moves, the faster money is available to you, the more you want to spend it.
So you're saying if I'm working for an employee that actually has this, I can get paid as soon as I walk out of the building, I can get paid up to the hour?
Yeah.
Oh, wow, that's ridiculous.
So, and that's the way that things are going to transition. Once they move things onto crypto rails and they start using these currencies and these rails to transact, that's the impact that it's going to have on the real person.
Right.
A lot of people are, focused on, making money, like you said, in stocks or this or that or the other. At the core of it, it's what is this going to be used for, and how are people going to benefit from it? And those are the things I think will last over the long term. I think right now, and I was telling Scott this before we got in, I think we're at that point of like late 90s, early 2000s for .com, okay? Because everybody is launching a crypto.
Right.
For whatever reason. There's meme coins. There's people that are actually, trying to do stuff with it.
You got a Jake coin?
I don't have a Jake coin, but
Trump's going to get one? You going to get one?
Trump's got his coin.
Yeah, I did that.
So you're just seeing these pop up over and over again, and then you have
Would
people
you recommend to buy a Trump coin? Especially now that he is the president?
People have made money on it.
Yeah.
I don't see the utility in it, like today, not to say that there won't be one in the future. And that's what you're kind of gambling on. It's what you're speculating on when you buy these tokens is somebody's going to use this for something later on that's going to cause the price to appreciate or is going to cause stability for the price later on.
Right.
Today, you know, it's a gamble. We're here in Vegas.
Yeah.
And if you want to gamble a little bit, then this is a good town to do it.
Yeah, but you know what? It's nice when you're gambling and you could see the money and you could see the cards and you actually have control over it.
Well,
in the crypto world, you really don't have much control, man.
No, and there's so many different compounding factors that cause price to move one direction or the other one. You can have price manipulation. People that control large amounts of the supply of a token can dump on the market and manipulate the price. And so that's where you see rug pulls. You know, people will launch a project, a bunch of people buy in. What was the girl that I can't think of her name now, but she was like, you know, famous on TikTok there for a short period of time.
Hak-Chu?
Yeah, Hak-Chu.
Yeah,
There you go.
Yeah, that's right.
She had that token, and then now she's never been heard of ever again after she
Right.
launched that token and rugged a bunch of people. So, and there's no laws around it.
How do I get a Wham Bam token? I need
You could launch one.
Maybe do a Wham Bam. But how do I go about that? And what does that mean?
Well, so
You know?
I mean, most of these are EVM-based tokens, or you can do it on Solana. There are a lot of people that do that as a business. They will launch a token for you. So they create the code base, and they will launch it on whatever network. They'll list it on a marketplace for you, and then you know they take a portion of the tokens for doing that. But you have counterparty risk there, right?
What is the going rate for taking tokens? Like, you know, the percentage of what it costs.
So if you're doing it the right
This is
way,
the wild, wild west out there, isn't it?
it is. Yeah, it's. I mean, whatever you want to negotiate with somebody.
Yeah.
When I'm looking at projects, I actually built out a full framework on how to grade crypto companies and the launch of an ICO or initial coin offering. And ideally, you don't want the founders or the people that launch the network to have any more than 20% of the token. And we've actually seen that with the legislation that's been put forth in the Clarity Act here that hasn't been codified or passed yet, but is sitting in the Senate to be voted on. They don't want any one company to control more than 20% of the supply of a token. And that'll be passed into law likely, you know, either late this year, if it happens this year, or probably Q1 in 2026.
Yeah, that makes sense. I mean, when you think about it.
Yeah, well, you don't just the counterparty risk, right? If they decide that they want to sell all of that off at one time, you're
Right.
subject to that price movement, and that's not good for your investment.
Right. Anything go to zero? You see these tokens go.
Oh, yeah, there's going to be probably 99.9% of what exists today is going to zero.
Really?
Yeah.
So you're not really a big believer in all coins that are out there.
No, not at all. I think over the long term, after we get legislation and what I think is going to happen with Tether and Bitcoin, probably, you know, maybe 50 to 100 networks and tokens last over the long term.
Let's talk about Bitcoin a little bit because obviously that's the main coin, right?
Yep.
That's the one that started this whole thing
For sure.
back in the day. And everybody was like, you know, I remember I even used to have some Bitcoin back in the day, but I couldn't spend it. I couldn't use it.
Right.
So it was like, what
What's the
am I doing with
benefit?
this?
Yeah.
You know, of
Pet
course,
rock.
I wish I had it today. You know what I'm saying? Of course, I did what everybody else did, got rid of it because I couldn't do anything with it.
Yep.
You know, how is it that that's, you know, blossomed as much as it has? And what do you think the reason is for all that?
Well, so there's a fixed supply on Bitcoin. There'll only ever be 21 million, right? And so scarcity, right? Supply and demand, normal economics that you look at for things. And that's why a lot of people are attracted to it. It's in the code base. There's never going to be, well, unless there's quantum computers or they hack the code, you could add more Bitcoin. We'll talk about that if you want to.
Yeah.
But as it sits today, there are 21 million Bitcoin, and that's all there'll ever be. Almost 20 million of that's already been mined. So there's really only about 1 million Bitcoin left that are left to be mined. The last Bitcoin or last piece of Bitcoin that'll be mined is like 2164.
Now, when you talk about mine, explain this because people hear the word mine, they think you're out there digging for gold.
Yeah.
You know, explain what that means to some of the younger viewers as well.
Yeah. So people validate these transactions, right? And you want to incentivize people to do that. So there's these large supercomputers at this point, farms of computers.
And that's what it is, right? It's a bunch of computers that's actually hosting these things.
For Bitcoin's network, at the end of each block, so there's 220 transactions, 220,000 transactions, is the halving cycle for Bitcoin, or 220,000 blocks is the halving cycle for Bitcoin. And each block has a certain number of transactions that are in it.
Yeah.
And they verify that they happened in a specific order, and everybody on the blockchain verifies those transactions. And there's a hash at the end of that block, and these computers solve the math problem for that hash.
Wow.
And whoever gets it first gets the distribution of Bitcoin for verifying that block first. So that's how they incentivize people to continue doing that on the network. Back in the day, you could mine it with your PC. You know, you didn't have to have, you know, this crazy amount of supercomputers and ASICs and all the stuff that they have on the farms today. So it's very unlikely if you're mining it on your computer that you're ever going to get any Bitcoin at this point. But the people that are doing that at scale, that's why you see these large companies that have raised money and now they're listed on the stock exchange. You've seen venture capital. You now got institutional capital that stepped in. We've got ETFs and other exchange traded products around Bitcoin. And that's why you've seen the proliferation of it.
Yeah. Go into the ETFs. I want you to talk a little bit about that because a lot of people are a little they're a little unsure about that. Sometimes people think of ETFs, they're thinking of, this fake world that people are buying certain things, for this unreality, but reality, futuristic type of city or world that they have out there. Well, explain the actual ETF in this crypto world.
So an exchange traded fund can use an underlying product. It's a derivative of that underlying product. So you have ETFs for gold and a lot of different things. So basically, if you don't want to have to be the one to hold the bearer asset, so if you don't want to understand like how to buy Bitcoin on exchange and move it to your cold wallet or deal with any of that, just buy it through the ETF and let the big dogs handle that, right?
Gotcha.
And they charge a fee for that. So BlackRock's, 25 basis points. Most of the time in ETF, the issuer is going to charge you somewhere between 1% and 2% per year.
Right.
As their management fee for it. And that's how they make money, but it's listed on the New York Stock Exchange or the NASDAQ. There's a couple other exchanges it could be listed on as well. But that allows you to participate through your 401k or your IRA, which is where most people's investments are today.
Right.
It gives them access to it.
Now, you talk about a cold wallet and a hot wallet.
Yeah.
Explain that one.
Yeah.
Because it does get a little confusing to some of the younger generations.
Yep.
Because these kids today, and this is, I love to do podcasts like this with people that can provide information to the younger generation that don't know what to do with the money. These younger kids that are coming out of school, even the ones that are making money, even with NIL money, some of these athletes and stuff, they just don't know what to do with it and they're uncertain, So it's great to have this type of information out there so people can actually listen and learn, but they hear cold wallet, myself, I want to know, what I'm saying, as well, because I know I have my money, with Coinbase, but I hear you talk. That's probably not the wisest thing.
Well, I look at the exchanges like a public restroom.
Yeah.
Right. So you get in there, you do your business and get out.
Right.
And so when I say get out, the way that I could explain this to people in a way that they would understand, or an analogy would be, you have cash in the bank. Right.
Yep.
Or a better example would be, you have stocks over there with your broker at Schwab or Fidelity.
Yep.
They used to give you a physical stock certificate, and you could take that and go put it in your safe at the house. That's what you're doing when you take crypto off of an exchange. You're taking that physical item and you're holding it. So there's no counterparty risk, but radical responsibility. If your house burns down or something happens to that,
gotta go to you.
And they can't issue new stock certificates like for the crypto. Okay. So the company could do that. If you lost it and it was registered to you, they could issue you a new one. Doesn't work that way with crypto. If it's lost, it's gone.
Yeah.
There's no insurance, there's no recourse. And so, it's good and bad. And that's where we kind of sit with the wealth management that we provide. Is we do institutional cold wallets for people at a federally chartered bank, and we create a Schwab account for your crypto. But most people, they take it, they put it on a Ledger, a Trezor, some other cold wallet. Cold wallet just means it's not connected to the internet. Hot wallet's connected to the internet. So when it's a hot wallet, it has additional risk. It could be hacked. There's a lot of people that use Atomic Wallet or Exodus Wallet. You could swap things on there. You can do a bunch of other stuff with it because it's immediately connected to the internet.
Right.
With a cold wallet, it's a little more cumbersome to get to it and move it around and do things with it versus it being on a hot wallet, but it's more secure.
Now, putting it in with a company. Now, where can we find because you handle this. You do this for clients, right?
We do.
So where do we find that, number one, so we could pop this up too?
Yeah, so Digital Wealth Partners is our SEC-registered RIA. We manage about $1 billion in crypto today, and we do that with our custodian, Anchorage, which is a federally chartered bank. They're regulated by the OCC. They're the only people that have that designation today to be able to hold crypto for corporations. They don't do it for individuals.
Yeah.
So we help people establish a corporation or a trust in order to be able to hold their digital assets in custody with us there. You actually just had BlackRock move the majority of their assets from Coinbase over to Anchorage for all of their ETFs to hold them there because it's the highest level in the land today for security.
Oh, yeah. Now, let's talk about your background. How'd you get into this? Like, how did the crypto world hit Jake?
I made a bunch of money in crypto in 2021.
Did you? Is that what it was? So you were young. Did you go to college?
Went to University of North Texas. Went to school for finance.
All right.
Never used it. I had a short internship at Northwestern Mutual and hated it. I felt like skeezy selling my friends and family life insurance products and stuff.
Right.
And like being in your early 20s, nobody that's older wants to listen to you tell them how to manage their money, right? Like
it is a problem.
What do I know?
It is
right?
a problem.
I hadn't been through,
Today's day has changed a little bit though, because of what's new and what's out there.
Well, and I think that's the reason people that are a bit older than me and have more wisdom are willing to take the time to have a conversation, because this is my lane.
Right.
Whereas they may have made their money in real estate or through a business transaction or investments in stocks. This is new and this isn't something that they're super familiar with. So maybe they're willing to lend an ear to somebody that's not quite as, old as they are. But anyway, so I had that internship, hated it. I went and worked in sales for about a decade, industrial sales, scaled multiple locations for Fastenal. And then I managed the third largest location in Texas for them at one point. And then I got acquired by another company. They offered me some equity and some things to, come over there and help them scale their business. Year goes by, we doubled the business. Didn't end up working out the way that I wanted it to. That's okay. Life happens for a reason.
Sure.
And then I started consulting, doing M&A with some of the business owners that I had worked with. We had 3 exits. And during that time, I had been saving for a home for my wife and I.
Right.
And I put some money back, and I had my 401k from my previous employer. And then the market fell in 2020. I watched my dad miss out on American Airlines when it was, in the 20, 30, 40 cent range right before they were going to go bankrupt. He pulls me in the office. I'm like 16. And he's like, hey, got $100,000 to pull it out of the market. I want to put it in because I think they're going to bail them out. But like, I need this to make sure that we don't starve over the next year.
Right.
And so anyway, he didn't end up doing it. But that, kind of taught me a lesson. Like when there's an opportunity and you have this visceral reaction, like you should do it.
Yeah.
Take a swing.
It's so funny because I actually was on the other side of that. My dad did the same thing. He worked for Pepsi for a very long time. And of course, they made them invest all their money. And by the time he retired, it was all gone. They lost it all. You know what I'm saying? And it's like, and you see a lot of people, unfortunately, they got put in those positions. So it's a little scare factor. You want to be careful.
Well, timing matters.
Timing
right?
matters, yeah.
And so anyway, when the market fell in 2020, I rolled all the money that I had saved for my wife and I, and my previous 401k, rolled it to a self-directed IRA. And I got in regular stocks: Facebook, Amazon, Google, Tesla.
Right.
Okay.
Yeah.
Did good.
Good ones. Yeah.
I was like, okay, if the world shut down.
Right.
Like,
you didn't buy any S&P though?
No. Well, it was my dad's whole mantra my whole life. He was like, just put it in the S&P and, it doubles, whatever. It really just keeps up with inflation.
Right.
Is all the S&P does. Whenever you put the money in, it holds its purchasing power.
Sure. But when everything's bad, you're getting a discount on all those good companies. And that's the nice part of it.
You want to look at things like Warren Buffett.
Yeah.
Right. So Warren, he's a value investor. Ben Graham, they're going to buy things at a fair price or a discounted price compared to what they think the real value of a company is. And so that's why I picked those 4. I rode those back up. And when they got close to the same levels they were, when I had stayed out of the market,
right,
I was like, okay, I need to de-risk here. I don't know if this is going to be a dead cat bounce. Obviously, the market continued to do well for an extended period of time. But when I de-risked, I was watching, a bunch of Peter Schiff content. I don't know if you know who Peter is or not.
No, go ahead.
He's a gold bug.
Okay.
And he's been saying the end is coming since, 2000 or probably before that. And he's done well on his gold now.
Yeah.
But
that price of gold's good right now.
It's really good right now. So he was debating a Bitcoin guy in this video that I saw. And I was like, that's when it clicked for me. I was like, oh, this is the next iteration of the internet. This is how they start moving value instead of just data. And then, Bitcoin's kind of the entry point for people. And then I got to looking into it, and there was like 20,000 cryptocurrencies at the time. And I'm like, how do you pick out of all these, like which ones?
Put them in a hat and draw one.
So anyway, I just used the same premise that I did in the stock market. I'm looking at the teams. I'm looking at the total addressable market that they're trying to conquer, what the use case is, like what's the tangible value of this network and the token, and how's that going to work? And obviously, we still haven't seen the adoption of these assets yet. But I got in, I picked 13 positions, and I went deep on those 13. So I took all the money I made in stocks, rolled it into crypto.
All in.
And I don't think I'm that smart. I think I just timed it well. I got in at the right time and everything took off. I listened to people that were smarter than me that had been through previous cycles.
That's a good thing.
And did really well. And so about the end of 21, I turned it into a lot of money. Didn't come for money. And so I'm like, just kind of leaning on my
Now,
finance background.
so when you're looking at a lot of money, tell me a little bit about, because a lot of these viewers don't know, like, what do you need to start with and what it can grow to?
Yeah, so
type of thing.
Couple $100,000 turned in about $20 million.
Yeah, that's more than a lot of money.
Yeah.
You know what I mean? So, and the viewers need to hear that and know that, understand what that means.
Yeah,
so
100x return.
Yeah, that's pretty good.
On a couple $100,000.
That's right.
And so at that point, I didn't know what to do with that. I've now sold some and I've got tax implications and I'm like, I should have sold more.
Right.
You know how it is at the top. You're like, it's going to go more. It doesn't.
See, let's talk about that real quick, because taxes is such a huge portion.
Oh, yeah.
And people like, you make 20 million, but you really don't bring home 20 million.
No.
In fact, you bring home more like probably 13, I'm guessing, if you did everything really good,
Well,
but a lot of it gets gone,
Well, and that's what we work with people to do to mitigate taxes. We structure estates and we do things. We work with CPAs. If you have it structured inside of a business or a trust, you have a lot more breadth of the tax code that you can use rather than it being in your personal name.
Sure.
And you can do things with foundations or charitable remainder trust, and we can get into all the fun stuff if you want to. But anyway, so I worked with, I would use my sales background,
right?
And I just started calling people that said that they did certain things with crypto. I just Googled CPA for crypto, tax attorney for crypto, accounting for crypto, wealth management for crypto. And like the first 30, 40 results on Google, I would just call them all.
Really?
And like I've spent all of my time learning about this stuff. At this point, I'm 2 years deep into it, and I had a pretty good breadth of knowledge, and so I was able to discern like who knew what they were doing and who was kind of full of it. And a lot of them were just like, yeah, we had a client that had some Bitcoin one time and we helped him out, but they put it on their website because it was popular at the time.
Sure.
So I whittle it down to the 5 or 6 people I worked with to set myself up, and then I get on Twitter and started talking about it, how I was mitigating taxes, how I structured my estate. And I was met with this deer in the headlights look from a lot of people. Like, there's no regs around this. What do you mean you can structure your estate and you can mitigate taxes and do all these things? And so a few people were nice enough to make some introductions to some family offices. And I started consulting for them. And then over the last really 2.5 years, we've built out all the private client services that you would need if you made a bunch of money in crypto.
Wow, that's great. So how do we make lots of money in crypto? Let's go, Jake. Let's go.
Well, you want to find the ones that are going to be used. I think we're right on the precipice of regulation here for this asset class. Like I mentioned before, the Clarity Act, they're looking to codify that at the end of this year, early next year. You're going to see a huge boom, a Cambrian explosion in crypto. But at the same time, like a lot of these are going to go to zero, like I mentioned.
Yeah, 99.9% you said.
Yeah.
So how do we determine what is that 1% besides getting lucky meeting a guy like you?
Well, again, research, right? If you watch,
and listen, you stated that. I just want to make a point there. The 20 million that you made, you deserved it because of what you went through the process. You didn't get lucky. You know what I'm saying? You did your work, you did your homework, and you listened. A lot of people hear what they're supposed to do, but they never do it.
Or they don't take the risk.
Exactly.
Right?
That's it. And that's the whole point. People are complaining. Actually, a guy just in Georgia, a couple weeks ago, won $1 billion, lottery.
Yeah.
And you should hear some of the racket. People are like, I can't believe this guy won. I'm like, did you buy a ticket? Because he did. Right. You know what I'm saying? Like he literally went and sat in line and bought a ticket. Yeah. Why shouldn't he win? Type of thing. And that's
somebody's got to win.
Yeah.
Right? Like that's the whole deal. And if you play enough, I mean, the odds aren't fantastic that you're going to win the lotto, but somebody's got to win.
But the reality is he took the risk and he did it. And that was my whole point. Yeah. Like people that are listening and learning, if they don't act on it, and that's what a lot of people don't do, they don't act on what they hear and they learn. I just actually launched my first book couple months ago. Money Management. Awesome. Yeah, Money Management for Beginners. So it's for these younger kids, generations that, when they make money, what do they do with it? Have some rules, have some regulations, and where to put it. Go to Amazon today and purchase Money Management for Beginners, a book for everybody, especially younger kids. Kids that get money and don't know what to do with it. This is the best $20 you'll ever spend. We'll save you millions. That's right, I said millions of dollars if you start young and earn you the same. Amazon. Amazon. Crypto's a piece of that. So
well, you want to get a good team around you. So that's what I figured out. And if you listen to Robert Kiyosaki, he talks about this when he goes into doing business. He's got his attorneys, he's got his CPAs.
Gotta have them attorneys.
Like, you have to have good people around you that have the wisdom to help you make good decisions.
Right.
And if you don't have that counsel and you haven't ever done it before, you're going to make mistakes.
Yep.
And that's my concern. We work with a lot of people that have somewhere between 500,000 and 5 million in crypto that we believe is going to go 100x in the very near future. Those people are going to make a lot of money in a very short period of time. And I don't want them to end up lottery winners.
Right.
Most lottery winners go bankrupt within 3 to 5 years. Like
Facts.
70%.
That's right. Yeah.
And they've just, money management is a skill. And that's why you've written the book on it, right? Like if you don't understand that it's a skill set and making the making is very
That's the easy
different.
part.
Yeah.
That's the easy part.
Well,
so what you do with it after you make it.
Some people would argue against that. But to your point, you know, that's the easier part, I would say, than preserving your wealth over the long term, because then you have all of these other considerations. More money, more problems is a thing.
Yeah, facts.
And if you don't understand taxes, if you don't understand creditor risks, if you don't understand lawsuits, if you don't understand how to structure things, the wealthiest people in the world, what do they say?
Yeah. Well, wealthy people in the world are also the ones that commit suicide first, you know?
Yeah, there's a lot of that that goes on, unfortunately. But yeah, if wealthiest people in the world own nothing and control everything.
Right.
Right.
Yeah.
And so, you know, if you rear in somebody and somebody figures out you got a bunch of money, they're going to come after you in court.
That's right.
If you don't have everything structured the right way,
like all them LLCs.
Yeah.
Yeah.
Exactly.
Yeah. Yeah. So same thing with Bitcoin, right? Or any crypto for that matter.
So that's what we help people do. We structure it in a corporation. It's a management corporation, holding company for managing alternative investments with a sleeve in crypto. If you set up a trading company, you're not going to get the benefit of long-term capital gains. Everything's going to be taxed at short-term capital gains. But if you're trading a bunch, that can be advantageous because you're not going to get taxes on each individual transaction. It's at the profit or loss at the end of the year. So some of our clients will do both. They have their long-term bags, you know, that they're continuing to add to, blue chips that they think are going to do really well. And then they'll have a trading corporation that they trade meme coins or do staking or all the other crazy fun stuff that's in crypto with.
You know, it's kind of like Vegas inside, right? You know, you pull in, you buy some of this, you sell it real quick, you move money over here. But tell some of the viewers the tax implications with that, because that is something they don't understand. These kids sometimes they think, okay, shit, I can make $1,000 in a day just by buying some crypto real quick, selling it real quick, and boom, they think they made $1,000, but they don't realize you really didn't.
Well, yeah. So anytime you trade crypto, it's a capital asset. So just like gold and silver, they're precious metals, right? But if you swap one for the other and you have gains on it, taxes.
Yeah. How much? Tell them.
Right. Yeah. So if it's short-term capital gains, it can be taxed at your income rate. Whatever your income rate is where you're going to be taxed. Now, if it's long-term capital gains and you've held it more than a year, then it's 15 or 20%. Just depends, and it could be greater than that depending on your state and other things as well.
Yeah, and your tax brackets, all that. Yeah. That's crazy. So let's get into the XRP, because we know that you are the XRP guy. You know, that's all you're out there. You're preaching the XRP, and, you know, people watch it. And recently it's gone down, dropped under $2 again. And, you know, now it's starting about, it is back up today. It's back up today a little bit as well. But, you know, tell a little bit about that and why you're all in on XRP, because you are all in on XRP,
all in.
You know, which it's funny because I kind of had the same model, because it's like people are like, oh, you should buy this, you should buy this, you should buy this. It's like, well, I don't want to buy all these things. Let me just pick one and go all in and make that one be the right one, you know, type of thing.
Well, yeah. So what's people talk about diversification, and once you have a bunch of money, sure, you probably want to be diversified. That's the way you preserve your wealth. You want uncorrelated bets across multiple markets in case there's things that happen. You're hedging basically. And if you're uneducated and this isn't all that you do, I would recommend most people are diversified. This is all I do, though, right? So I'm going to put all my eggs in one basket and watch that basket is how I think about it. So for XRP in particular, it's the only thing that currently has clarity in the U.S. that's not a security. Until the Clarity Act is passed, which again we've talked about a couple of times, it's the only thing aside from Bitcoin that can be used at scale here domestically for a lot of the stuff that we mentioned, the use cases for payments, settlement of the back end of the stock market, FX. There's a lot of things that would provide, that would have a lot of benefit if they moved on crypto rails. And because of Ripple's, software and acquisitions and all the stuff that they've done alongside other parties that participate on the network like R3 and SBI, I think that it's going to be adopted globally before everything else. And I'm here for ROI. And so return on investment, I think it has the highest probability of making a significant amount of money in the short term. And then we'll diversify into other assets that I think will do better over the long term. But until then, that's why I'm siloed where I am.
So if somebody had I think it's around Bitcoin's around 85,000 today or somewhere in that range.
Yep.
So this is somebody that had 100 grand.
Yep.
Would you recommend they buy one Bitcoin, or would you recommend they put it all in XRP?
It depends on what your long-term goals are, right? So again, wealth preservation, it's digital gold. I don't know that Bitcoin's going to stay here much longer. I think that there's going to be some volatility in the market. Could it go to 1 million over the long term? It's one or the other. It's 0 or 1 million.
Yeah.
I'm not sure which one.
Can it go back to 0?
Oh yeah.
Yeah.
Yeah. And again, like the whole
So
market.
when do you know when to get out? When do you know when to grab some of the winnings? Secure some of that stuff.
I look at the fear and greed index, I think is a really good indicator on that. So right now we're in extreme fear in the crypto market. We're actually worse than we were after FTX and Voyager and all those things imploded in late 21. And with that, what does Warren Buffett say? He says, be greedy when others are fearful, and fearful when others are greedy.
That's right.
Right. So if you see the crypto, fear and greed index, you get over 80, probably a really good time to sell some positions if you're going to be a trader. I'm an investor. I have 4-year time horizons and no less. So that's just for context for people. That's why I'm in the position that I'm in. I actually took this position in early 22. So early 26 will be 4 years.
Say,
you
got about a year left.
Yeah.
Not even. No, it's early 26.
About 6 months.
Yeah,
about 6 months left. Yeah.
So you have to make some decisions.
Yeah. Well, and that's kind of on the short end, right? It could be, I don't plan on ever selling my XRP.
Yeah.
I would rather borrow against it. People that have built prolific real estate portfolios, they didn't do it by buying and selling their real estate. They did it by buying one real estate property, waiting for it to appreciate in value, keeping tenants in it, growing that. Maybe they, remodeled the property and got additional equity, and they're able to draw a HELOC on it, and they go buy another property. And then you do that over and over and over again, right? The wealthiest people that I know don't sell assets. They continue to grow their estate and use debt as a tool.
Right.
Or they use the asset in some way to produce cash flow, and they get tax benefits for doing that. Real estate's another great example there. Where you're able to use accelerated depreciation on the properties or 1031 exchange if you are going to sell it to defer the taxes later on. I think you're going to get a lot of those benefits in crypto as the asset class matures and we get regulations around it. Today, it's just a capital asset and the interest rates aren't that great. But imagine starting your real estate portfolio in the late 80s. Interest rates were not great.
No, they weren't. They were high. And that's what I try to explain. Like what they saw in the last 5 years is not norm. And that's what people are looking for now, but back in the day, if you had 7%, it was good. You know what I mean? I think my first mortgage was 11%. I don't know,
Well, people got to make money, right? And it used to, you could sit your money in a savings account and earn 15%. People were making 15% on CDs or bonds back in the day. We haven't had that for the past 15 years. After 08, everything's just been pretty much zero. And that's why we're coming into a liquidity crisis here, and there's going to be a global margin call because of the reverse carry trade unwinding. And I think you're going to see a repricing in stocks, gold, everything I think is going to get a haircut by about 50% in the near future. Yeah.
So you think now's a good time maybe to pull away?
I don't own any stocks currently.
Really?
Yeah.
So that tells you right there where Jake's head's at.
Yeah.
Although the market's booming this morning.
Yeah.
So it was coming back out.
Again,
but is it, it's timing too, though. This type of year, though, let's be honest. Like towards the end of the year, a lot of people are selling. They're pulling out anyways. They're even taking some of their losses because they want to claim that stuff, right? And then come January, February, they're back in the market again.
Well, and you can do that in crypto in ways you can't do for securities.
Okay, let's talk about that.
So you can tax loss harvest with your crypto. So if you're down on positions that you bought earlier this year, you could actually lock in those capital losses. And normally during a wash trade, if you bought and sold a stock and then bought right back, can't do that in stocks. You got to wait 30 days.
Yep.
Crypto, there is no explicit designation for that from the IRS. So you are still able to do that. You can sell and buy right back and lock in a capital loss. You want to work with a good CPA that's a little more of a cowboy. Most of them are going to tell you, it probably is going to be this way or that way. And they may not want to, take that potential issue if it comes up. But I think it's fine until we get an explicit designation from the IRS that wash sales are not available. And I think they'll grandfather people in that participated in that prior to that ruling or whatever that ends up being.
How do you think the crypto market is going to affect like Visa, MasterCard and stuff?
Oh, they're going to adopt it. They're already here.
Yeah.
Yeah. We've talked to MasterCard. I've talked to Visa both.
Okay.
MasterCard actually has a product that can identify anybody that owns crypto across the world. They can trace it to you. So everybody thinks that they're participating anonymously. I got news for you. You are not. MasterCard's already cracked that deal. So, and that was 23. Talked to them in Dubai in 23. So they've had this a while. It's not like it's a new thing that they can trace all this stuff.
Right.
Zcash, we've seen a run on some of these, tokens with their privacy networks. I think that there's a little bit more there, but I'm sure that there's a backdoor that these three-letter agencies have in order to be able to like look at stuff or subpoena things or pull things.
Right.
And if they can't, then they can use the MasterCard deal to figure it out. But anyway, yeah, they are absolutely going to, because if they don't, they're going to be disintermediated. If there's people that are offering instant real-time payments for very low fees,
right,
2 or 3% on your MasterCard, Visa, your Amex, like why am I going to pay this excess fee? Especially for businesses, they're going to start accepting the other and move away from those. So if they don't adopt this and then lower their fees aggressively, they're going to be left behind. But lowering their fees aggressively doesn't mean they're not making money.
Mm-hmm.
If they move to this technology, it's actually much cheaper and much faster to transact. And so, and the volume of transactions or money movement is going to pick up substantially. So like I talked about getting paid to the hour.
Right.
Like how many payments is that instead of one payment every 2 weeks?
Yeah.
It's a lot.
It's a lot.
Right?
That's right. More transactions, more clicks, more pennies.
Exactly.
More basis points that are popping out there.
If their margins get better, even though they reduce their fee to the consumer substantially, and there's more volume of transactions, they'll actually make more money.
Right.
And so that's why they see this and what they're going to do with it. The analogy I make for people is like back when postal mail was a thing that a lot of people used before email.
Right.
If you were really getting it back in the day, how many letters do you think you sent?
Not like I get emails today. I wouldn't be able to open them up.
maybe 25 letters a week if you were really getting it.
Yeah.
I get 25 emails in the first hour of each morning at this point.
Yeah.
So the same, and there was frictions, there was a latency and a cost associated with sending those letters, just like there is ACH payments today.
Right.
Well, when you can move real time instantly, the amount of money that's going to move and the transactions are going to pick up exponentially. And so that's what effectively these networks do.
Yeah. That makes a ton of sense. And you just dumbed it right down, for some of these people to realize. Because, that totally makes sense because it's a real, when you compare it to like emails and mail, it's just money movement. But I would think the Visa MasterCard would kind of be a frown on it because they don't want to lose their transactions and lose their money. But you're right. They better get on board.
They'll be disintermediated if not. And they've known about it for a long time. They've been working on this transition. They've done pilots with large companies for the past 6-7 years.
How would companies take payments for that? It's making me think now.
Well,
like if you want to come in, I got a retail store and you want to buy, this mug and you want to pay with some of your crypto. How could I accept that as a store owner?
There are multiple merchant services today that allow you to accept crypto. BitPay is one of those. They charge 1% on those.
I own a processing company, so I'm thinking about this.
Well, there you go.
That's what I'm saying. Like, but I haven't seen it out there.
Stronghold is another one that you can look at. They're kind of like a Stripe competitor. But the reality is most people are just going to use stable coins. So we had the stablecoin bill passed this year. We really haven't seen it adopted by retail or at scale yet. You've got USDT, which is Tether. You got USDC, which is Circle's issued stablecoin. You got ROUSD, which is by Ripple. And there's probably 20 other ones that are more frequently used. But everybody's launching these stablecoins now because they see Tether making $15 billion a year. And, they're the most profitable company per capita in the world. They have like 100 employees and make $15 billion a year.
Damn.
So, people have seen this and the banks want in on that now too. Now that we have stablecoin regulation, you're going to see Bank of America, JPM, all the big boys are going to come to the table and soak up these treasuries that'll flow onto the market from the reverse carry trade unwinding. And they'll launch, most of their stablecoins will be internal. I don't think we're really going to see the adoption by retail for their stablecoins. You have a Google Wallet?
I don't. I have a Coinbase.
Okay. Well, just on your phone.
Yeah, no, Apple Wallet. Yeah, I got a phone.
So you have an Apple Wallet on your iPhone.
Yeah.
In the future, you're just going to be able to pay with that. You already have Tap Pay, right? Which has kind of been accelerated since COVID.
Sure.
The contactless payments.
That's right.
Everybody uses now.
Nobody wants to touch it.
But with that, you'll be able to hold whatever you want. I think in probably 5-6 years, you'll have titles to everything on chain inside your wallet, and all of it will live right there, and you'll be able to see it all. Yeah. And if you want to sell some of your Apple stock to buy something at the grocery store, You just pick that one and you'll be able to pay with your Apple stock instead of having to convert it to dollars and then do that.
Wow. Yeah.
And that's another benefit of this technology. It's like the ultimate barter system for people.
Right. Are you worried about security with this? Because more things, more movement, more opportunities for loopholes.
Oh, sure.
You know, let's talk a little bit about the security piece of it all, because I know you've done a
Oh, yeah.
you know, intensive background with that, and you've probably heard of some horror stories too.
Yeah, well, I mean, we have clients and people that we're looking to work with every single day that just get scammed. They'll get phished. If you do move
How
it
do you
to
get phished? How does that happen?
so somebody moves it to a cold wallet, they'll move it off of an exchange, or they'll keep it on the exchange, and you can be phished off there too. So somebody sends you an email, and they pretend to be somebody else that's affiliated with wherever you're holding your crypto.
Yeah.
Whether it's the cold wallet manufacturer or
Happens
the
a lot.
exchange. And you click on it because you're like, oh crap, like I got to fix this, you know?
Right.
And then they pretend to be that person. They get you to tell them your passwords or your keys.
Right.
They're able to log into the wallet, and then they send it wherever they want and take it from you. And that's why a lot of what we do is very important. We have multi-sig on the wallet. We haul and verify the person is the one sending the transaction. We also do whitelisted wallets. So you have to verify the address you're going to be sending it to.
Right.
And it takes 24 hours to update. And then, you know, there's just a lot of things we put in place to mitigate that risk of loss at an institutional level. And most of our clients just want to hold this stuff over the long term anyway.
Sure.
They're not paying for things with it.
Right. Yeah, you're not going out purchasing stuff with it. You're just trying to grow wealth.
But yeah, anything that seems off or you're concerned about, or it's a link in an email, I just don't do anything.
You know, I wonder about the fees and stuff, because it seems like even with Coinbase, you know, buying stuff on Coinbase, but it seems like, you know, the price is one thing. It says it's $1.97, but you end up paying $2.07, and you're wondering, wait a second,
How did that
happen? How, you know, it's not like on the market where you're buying something at a certain price and that's what you're buying it for.
Well,
you know?
so that's how they make money. They have a spread.
Sure.
So all these exchanges either mark it up or mark it down. If you're selling, they mark it down. If you're buying, they mark it up. And that's their spread and their piece. And then they'll also charge you a fee.
Their VIG.
Yeah.
Like they say in Vegas. It's the bookie's VIG.
Yes, what it is. Which, hey, look. Like,
you got to make money. I get it.
Everybody's got their value that they provide. And I don't dog anybody for that. But like at the same time, you want the most bang for your buck. We have OTC partners that we work with. And we also do transactions ourselves at Digital Wealth Partners. Most of the time, the OTC desks are $250,000 or more. If you're buying that, they'll do it for 20 basis points. There's still going to be a spread on that for them to make.
It's a lot. 20 basis points a lot.
For us, we do 20 basis points with no spread. So, you know, if you were moving $2,000, it's, you know, $4 would be the cost.
Yep.
And we do that for any size order. Most people are going to be way more than that. I mean, there's some people out there charging 3.5% on every single trade that you're doing with them. Sometimes more, depending on the spread and the fee they're taking. So, yeah, you make a good point. You just want to look for the best opportunity that, depending on the amount of money that you're spending.
Yeah. Safety is important. And there's so much stuff going on in the world today. People are scared. And I think I don't want people to be scared of crypto, because there's some great stories with people that have it, that actually know it, you know, not just somebody that bought it and made a bunch of money and now they're buying houses.
There's that
things.
too. I've met plenty of them. And there's nothing wrong with that, right? Like this is an opportunity for the average person to break out of, you know, poverty.
Yeah.
Realistically.
Yeah.
If you pick the right thing and it makes a big move and you exit well, it can really change your life.
Sure.
You know? It can also ruin your life. If you're over leveraged and the market's unforgiving and you lose it all. I've seen people lose millions of dollars in a very short period of time. I've seen people make millions of dollars in a very short period of time. But until the market becomes more established, I mean, it's only $4 trillion total market cap for crypto today. Sounds like a lot of money, but in comparison to just gold is 13, 14 trillion.
Right.
The stock market globally is 600 trillion. Like, it's a small asset class in comparison to most everything else. And
but think about the growth of where it was a year ago to where it is today.
Yeah.
That's
doubled.
the difference. Yeah. So, I mean, you know, that tells you the speed of it.
Hi, I'm Phil Benamino, CEO and founder of Cost Plus Processing, the company that provides financial services to your business. We provide things such as POS systems, ATM machines, and check services. One of the biggest things that we strive ourselves here at Cost Plus Processing is our customer service. We are an A+ rated with the BBB with customer service, and we're proud to say we're here in the United States with all of our customer service agents. Our objective is to actually teach you and educate you about the costs that you're currently paying and show you ways where you can eliminate those costs that you no longer have to pay. One of the biggest programs that are out there today is our dual pricing program, where you actually can offer your customers now a choice of how they want to pay. Do they want to pay with cash or do they want to pay with card? And if they pay with card, it actually helps you to absorb the card fees, so you no longer have to pay the fees like you've done for many, many years. Cost Plus Processing aligns ourselves with some of the top POS companies out there in the industry today. For example, we have perfected the car dealership industry, and our dedicated team are equipped to manage a variety of online payment forms and financing options that merchants require in this advanced ecosystem of payments. If you have a restaurant, we are proud to be able to manage the ongoing difficulties that arise from this fast-paced industry, and you're looking for pay at the table, where customers can easily swipe their cards, tap their cards, and make their payments with tip, and also have a choice of how they want to pay, we have the solutions for you here at Cost Plus. We want to help other small business owners make their dreams come true for providing the best financial support. From barbershops to liquor stores, having the ability to take payments, schedule online, and make calculating tip sharing an easy task only helps business owners put more attention and money into what really matters the most. Also, Cost Plus Processing is on the front end of AI. We can also provide you kiosks for your business, so customers can walk over to the kiosk and order anything that they want. Likewise, if you're having problem getting employees in the kitchen to work, we can also provide you robots that will actually deliver your food straight to the customer. I want to thank you for the time that you took to learn a little bit about Cost Plus Processing, and most importantly, why we are the future of merchant processing.
Right.
Well, that's the deal, and that's, there's money in volatility.
Right.
Anytime there's large volatility in an asset, you can make a lot of money, and that's where the institutions see the value and why they're starting to come to the table. And also, like, on some of these ETFs, there needs to be at least $50 or $100 million worth of value in the ETF before they can even cut a check.
Yeah.
Like, their minimum check size is $10 million. And so now that we've seen, these ETPs and other ETFs that have been brought forth, and there's enough liquidity in the asset class, I think you're only going to see further adoption because now the institutions are at the table.
Right. Gotcha. Okay. So I'm going to take you back.
Okay.
I'm going to take you back to 16-year-old Jake.
Okay.
You're 16 years old. You got $1,000.
Yep.
What should you do with it? Where are you going to place it knowing what you know today?
Self-improvement.
Yeah.
Yeah. So I've paid more money than I've been comfortable with to get in rooms I didn't belong in, over and over and over again. And that's been the highest ROI that I've ever had. My ability to generate income and help other people and provide value will far outweigh any investment that I ever make.
Right.
And so, you might be thinking, like, I would have put it in Cisco, or I would have put it in whatever stock. I'm
actually the same way. Put it in yourself first.
Yeah. And people like, what does that even mean? It just means find mentors, find people that can help you. Yes.
Yes. People that can help you and learn.
Some people think people are grifters, or they're taking advantage of other people. You get out whatever you're willing to put in. So you can pay a bunch of money and be in a room with a bunch of people. If you don't talk to those people,
right,
or take what they explain to you and put it in practice, it's not going to benefit you.
Right.
But if you are willing to do the work and get around the right people, I've been in multiple masterminds. If you've ever read Think and Grow Rich, reading, buy books with it.
Sure.
If you could buy a bunch of business books or money books with it and really just take that in and understand what they're talking about and start to put it to work in your life in practical application, you're going to make way more money doing that. And then people can't take that away from you either. Those are your skills, traits, and beliefs, and what value you're able to provide to the marketplace to generate additional. You see these people that go broke that made millions of dollars and they're millionaires again just after a few years.
Right.
Their network of people that they know and the value that they're able to provide is how they do that.
That's right. Make a phone call.
Yeah.
Just make a phone call. That's it. Get the Rolodex out. So, and it's important, and people need to understand that, because a lot of people realize, like, oh shoot, my time's worth something. Yeah, but so is somebody else's.
Yeah.
And being in that room with that person, if you want to try to level up, and we always say, surround yourself with the people that make you great.
Yep.
Right. I'm not going to be great in everything. I just want to be good in everything. You know what I mean? And bring all the great people around me.
That's right.
Type of thing. Right. And that's where you get it.
You want to be the best in the world at whatever you are good at.
Right.
And then if you get to the point where you are the best in the world at whatever you do,
yep,
the other people who are the best in the world at what they do will find you.
That's right. 100%. Besides yourself, Okay. What part of crypto? If they're going to go ahead and put their money in crypto, where should they bring it?
I would look at utility-driven assets. So you can go do some research and look at things. I'll tell you, like, some of the this is not financial advice, only for entertainment, educational purposes only. If you need a financial advisor, you can work with, Digital Wealth Partners, and they can tell you where to put your money. I can't do that, but I'm going to give you some frameworks that I use to make my money early on.
Awesome.
How's that?
Awesome.
So I look at a team. I look at the total, addressable market that they're trying to make investments in. One that's caught my attention today, aside from XRP, it's the only thing I've invested in the past 3 years. I threw a couple grand at it. Okay, so it's a flyer. We'll see if it turns into anything or not, but I think it's going to. So Hash, HASH is the token.
Okay.
It's on provenance, and the reason that's attractive to me is I did a video and did a bunch of research for this video, and I was like, the different asset classes that are being tokenized, and one of those was insurance. And I was like, okay, well, it's $8.6 trillion globally. It's like $3 to $5 billion a day in volume for payments and claims, or premiums and claims. This is probably going to move on to crypto. Where's it? Okay, which networks are doing this? It's only one of them, Provenance, and it's got that token, right? And the token's 4 cents. And it doesn't have the adoption yet. And it's also not listed on a bunch of exchanges. If you can find stuff before it gets listed on Coinbase or Kraken or Uphold, and it's something that is going to be used and attractive to other investors, that is probably going to work out well for you. Another one that I did really well on was Theta. I got in Theta at like 9 cents. It went to $15. VeChain, I got in.
When do you pull though? That you go from 9 cents. When you got to $10, was that not enough?
Oh, I've sold at $1.
That's what I'm saying. Like that's what I mean. Like, what are the rules there? Like, when do you determine that? Because what happens is you sell it and then you're like, boom, you kick yourself in the ass, right? Because 3 months later you find out, boom, it doubled or tripled, and you're going, oh, I could have had, So
I leave
what
a
are
bag.
the rules with that?
I leave a forever bag.
Yeah.
Okay. And people tell you to dollar cost average in, right?
Explain that.
So you're buying over a period of time. You take a little bit out of your paycheck every single week or every single month, and I'm going to buy this at this time. And you don't try to time the market.
Right. Time in the market.
Yes,
right?
time in the market always beats timing the market.
That's right.
Right. And sometimes you're going to get lucky and catch the bottom. Sometimes you're going to get lucky and catch the top.
Right.
Difficult to do. Okay. But the same way would be on an exit. Right. So I'm going to be looking at markers in the market. I'm going to have a couple exit points if I do plan on exiting over a period of time. And I'm probably going to leave 20 to 35% of what I bought in for forever.
Gotcha.
In case there is crazy upside. And I've probably pulled enough profits at that point on the way up that if it goes to zero, I still made more than my original investment. Right. So that's normally my first pull is like, and again, not financial advice, but just how I think through things at like a 4X.
Okay.
Probably pull 25%. Now you got your original money back off the table.
So we'll take your 2,000 example. When you bought $2,000 worth, when you get to 8,000, you're probably going to pull your 2,000 back and keep the rest there.
Yeah,
that's where I'm gathering. Right, you're not pulling 8,000. You're pulling 2,000 and keeping the rest there. And
yeah. And then that way I don't have any taxes.
Yeah. You didn't make no money.
Right.
Yeah.
I pull my original investment back out.
I like that.
So anyway, that's kind of how I think about things. And then on the way up, I'll give you a good one. Gentleman in Dubai I talked to in 2023, he bought the bottom of the market when FTX collapsed in 22, and he went all in on Solana. Brilliant.
Yeah.
Dude made a lot of money.
Yeah.
So he said, and it was about that time, he bought it at $9. He wrote it to 35, which would have been about, 4X return.
That's right. Yeah. 36.
And he said, I'm going to pull 30% off the table here. I'm going to buy a condo in Dubai with that money. All right. Now he's bought a piece of real estate with the returns on that to be able to, in Dubai, tax is a little different than here.
Yeah. There aren't any.
But, you would be able to depreciate that condo against the cash flow from the condo. And now he has a cash flow asset.
Right.
And so, and you just saw the other day, I think Robert Kiyosaki sold out $2.5 million, all of his Bitcoin.
Yeah.
And he bought real estate with it, which is his game.
Sure.
Right. But anyway, so back to the gentleman. He sold 30% there, and he said when it gets to 100, I'm going to sell another 30%, and I'm going to buy 2 more condos, and then I'm going to let the rest ride.
Right.
I don't know what he's got today, but he's probably got $3-4 million still in Solana, and he's got 3 or 4 condos that he bought with those profits. because he bought when
That's cash
everybody was
flowing.
when everybody was scared at the bottom of the market and for FTX.
Right.
He went hard on Solana.
Now, with that, something in that scenario, would you tell him don't pay cash for those condos?
I mean, you could finance them.
Because then it's less. Instead of having 3, you can have 10.
Yeah, well, but now you could pull a HELOC against them.
Yeah.
And do other stuff
That's
with
right.
that, right? And then you have cash flow to be able to offset that debt if they did pay in full.
Right.
If you're still servicing the debt with the cash flow on the property, you have less options. And for him, his number one goal in life is freedom, right? And so he wants to be able to go and do and spend time with his family. That's his number one priority.
It's not a bad one.
It's a great priority.
I like peace.
Yeah.
I like peace myself.
And so, anyway, for him, that makes the most sense. And that strategy aligns with his goals.
Mm-hmm.
So again, I would talk with a financial advisor or a CFP and figure out like, where do you want to be in 5-10 years? And what investments and what can I do today to be able to get closer to that? And like, what's the steps to get there?
Right.
And then you can put together an exit plan that might fit you. But that's kind of how I think through things in a framework I've been successful with in the past. Because I did the same thing as you, and many other people with my first one. I bought Chainlink at $4, and when it went to $8, I sold all of it, and then it kept going, and I was like, "Oh no,
yeah,
I messed up."
Those eyes, I've had those eyes.
Yeah.
You're like, shoot, no.
And luckily that one didn't run, but like another 4x from there.
I still do that in the market though. Even with Tesla today, sometimes it goes up, you're like, oh shoot, it's gonna drop back down to 200. It's 430, 440 now.
Well, and they'll do another stock split and everything there.
Yeah.
But like you want to leave a forever bag, but de-risking your original investment's always a good idea. And then if you're going to pull additional profits along the way, I would have something that you're going to move that money into that's a plan for that money, right?
Yeah.
Don't just pull profits arbitrarily. You need to understand the tax implications and what you're going to do with those profits when you pull them.
What about day trading in crypto? People doing that? What's that like?
Oh, I've tried. That's not my game. It's super stressful. And here's the other thing. You're trading against institutions. You're not going to win.
Yeah.
96% of traders lose money every single year. So
got that 96%. That's strong. I didn't realize it was that high.
Yeah, it's astronomical. Retail, and the other thing, like they have all your information. Webull, Robinhood, all these other trading, stock apps that are on your phone. The hedge funds and everybody else is paying for the data to get all of the retail transactions from them so that they can beat you.
Right.
You're not going to beat them.
It's like Vegas.
Yeah,
they're going to win.
The cards are stacked in their favor. So, more power to you if you want to try to do that. But that's not something I would recommend for most people, unless you went to school for finance and you worked at like an arb shop or a hedge fund, and you're a quant and you can build out an algorithm with trading bots and like you're super sophisticated.
Yeah,
sure. But outside of that, probably not.
Talking about bots, going to go into AI next anyway. So let's throw those. Yeah, right there. How do you feel about the whole AI with the whole crypto and everything else and how it's affecting the world?
How philosophical you want to get?
I mean, being real. Let's be real. I mean, your dollars are being moved by it and stuff. Do you trust and rely on that source as do all be all?
So distributed ledger technology and the adoption of this framework for moving money. The other thing that crypto is it's a database.
Mm-hmm.
So it's structured data that's easily accessible by an AI. So the combination of AI and blockchain, you really can't have one without the other to be able for them both to be successful. AI in particular, it needs a database of proprietary information to be able to access and make choices across.
Right.
You see this with the LLMs. They go out and scour the internet, and then they just regurgitate whatever the internet says to you. Now, the more specialized the data you have, the better answers you're going to get from an AI. And you can help it build out decision-making processes based on how you want it to. So the better you're able to prompt the AI, the better information you're going to get.
Right.
Over the next 10 years, I think that all transactions will move onto a blockchain globally.
Yeah.
And this is where the philosophical part comes in, okay? They're going to use an AI to govern all of that. And I know people have their thoughts about UBI, Universal Basic Income. Good or bad, I'm not here to debate those things. It's coming. Whether you want it to or not, it's coming. And I think it'll help a lot of people. It'll upgrade their standard of living. They'll be able to pay for their home or their groceries or other things that it's difficult for them to pay for right now.
Right.
And if you have the advent of all of these technologies converging at the same time, it's hugely deflationary. People talk about inflation and how much more things cost. If you have efficiencies created in an economy, it's actually cheaper to produce goods. We should be seeing things get cheaper as technology gets better.
That's right.
But they're printing so much money because they got to meet a 2% mandate that they're, holding that inflation rate for us and sometimes more.
Yeah.
So with the advent of all these things happening, you're going to get, I think the whole reason that they've done everything that they've done is to prevent a deflationary collapse that they knew was coming with the convergence of all of these technologies. And for a period of time, they will actually be able to print money in opposition to the deflationary pressure of all of these technological advancements to hold prices where they are.
Damn, you got this down.
And if you have an AI that's able to take all of that information,
which they can, they will.
And the other reason that the Soviet Union collapsed, if you want to look at socialism and things in the past, is that they weren't able to appropriate resources across an economy effectively. Free markets do that. The problem with free markets is people are very emotional. So you have wide swings up to the upside and to the downside.
Yeah.
But if you had an AI that could, appropriate resources based on those discrepancies in economy.
Don't get like me and you and pull out quick.
Yeah.
And try to call, let's sell and boom, and we're kicking ourselves in the butt a month later.
Yeah. Well, so anyway, I think there's going to be a regression to the mean. I don't think the volatility in markets is going to be anywhere near what it is. I think that it'll be much more correlated with the GDP and actual production across economies. Which will be good. People make investments in stocks and things, and it does go up and to the right over the long term. It's just a lot less volatile. It's much more predictable once they move to this system. And I think we'll move into a period of like renaissance. I think people will be able to upgrade their standard of living and then also not be so focused on working a 9 to 5 just to make ends meet. I think that they'll be able to back away and go, okay, what is my highest purpose? What is the value I can provide society, whether that's being a singer or artist or other things that they're passionate about that they just can't focus on because they're so consumed with having to pay the bills.
Sure.
Right. So I'm excited for it. It's not going to be a utopia. It's not going to be a dystopia. It'll be somewhere in the middle, just like everything else is on the bell curve.
Yeah. As far as theft goes, are you concerned that this is going to be a bigger problem? It's going to increase because now you have more stuff going on, more things out there? Or do you feel like, it's going to derail it?
I think it'll be less. I think it'll be much more secure. So that's the whole point of cryptography on chain is it's encrypted, right? And you can see all the bad actors. It's transparent and immutable. So if somebody steals something, have you ever been to Dubai?
No, I haven't.
There are cameras everywhere.
Yeah.
It is the safest place I've ever been to in my entire
That's what they say.
life.
Yeah, say you can put your phone on and you walk away.
You can leave it, walk away, come back the next day, it's still there.
Yeah.
And that could be because the culture there is Sharia law and they used to chop your hands off if you stole anything. But the more surveillance there is, again, I don't like that. I like privacy. I like anonymity.
Sure.
We help people make sure that they're able to maintain that in this asset class. But at scale, it's going to prevent a lot of bad actors. And if they're going to know when you stole something, they're going to be able to prosecute you immediately. And there's probably going to be some pretty significant consequences.
Right.
And so that's going to, I think things are going to get better. As far as people stealing things. And if they have supplemental income, you don't need to steal stuff from other people.
Right.
You know what I mean? Like
Right.
you can make ends meet, you're okay. You don't have to be a bad actor. Like, because there are people that are just put in bad positions and they don't have another way to be able to like get food.
It's so true. This literally happened last night in Vegas while I was here. A friend of mine, she went to the bathroom, left her phone there and walked out and her phone had obviously disappeared. We tracked it down to another woman's purse, who claims she didn't have it. Of course,
you can see, find my iPhone.
Of course. Yeah, of course, where the security guard comes over and like, hey, show me your phone and your purse. And she does. And of course, it's got my buddy's picture on it. It's like, oh yeah, it looks just like him, and everything else doesn't look like you. But to her defense, like you said, a lot of people wouldn't like me. I can't even fathom that. I'm like the thought of that. If I find somebody's phone, I'm turning it in. I'm gonna turn it in. I'm gonna turn it. If I don't know what it is, I'm gonna turn it in. I don't need it. I'm not gonna give it to But the thought that somebody actually kept it, and that's what his wife was so upset about. Like I can't believe somebody would actually keep it. I said, you don't know her financial situation.
Yeah.
To her, that phone could have been a meal. You know what I mean?
Right.
Type of thing, and it's a survival piece. So,
and that's why I think a lot of people steal and take things from other people and there are just bad people out there, right? That make a living off of it. But there are a lot of people that are just in bad situations and don't have they don't understand how to provide value in any other way and don't know how, like,
Put yourself in a better circle.
right.
Do better
That's
things.
what we talked about earlier with
Right.
$1,000 when I'm 16, right?
Exactly.
So
Do better things.
anyway, yeah, I think that there's a lot of opportunity with both of these technologies converging. I am fearful that there will be some manipulation and bad actors involved with it, but I think it's going to depend on the jurisdiction that you reside in also. I mean, like, China's a police state. They're a communist party. They want full purview of everything. They want social credit scores and be able to shut you out
Right.
if you're a bad actor. Here domestically in the US, I don't think we're going to have those same problems just because it's not, our culture's not that way.
Mm-hmm.
And so I think those that are in power and in Congress, even though you may think they're bad, which, everybody has their opinion on stuff.
Sure.
I think that we have enough reasonable people to make good decisions and put guardrails around this stuff to benefit society at scale.
Yeah. So, talk about any of the things that have actually put you on your ass. So some of the things that didn't go the way you really wanted them to go, because I know it's not all been roses,
No.
All the way. Everybody goes through that, those times. Talk a little bit about that, some things that happened to you along the way that really kind of set you down, before the comeback.
Real estate deal, first real estate deal that I did was on a multifamily property. It was a property in Midland, Texas. Tried to do. Had to put up the hard money. I had another investor that was going to come in alongside me and a group to syndicate the deal. Didn't go through, lost $350,000.
Hurt.
Gone. Not fun.
Right. Did you cry that night? Just curious. Did you cry that night?
No.
Didn't bother you that much?
Well, so here's the deal for me. Every time you want to level up, you got to be willing to risk 1 0 less.
Yeah.
So if you want to make 10 million, you got to be able to risk $1 million. If you want to make $1 million, $100,000.
Right.
Like,
it's a good way. It's a good number.
That's the way I think about it.
Okay.
So, and it's a learning, it's a stepping stone for me.
Right.
There's been lots of times where I don't know how I was going to make payroll.
Mm-hmm.
And you hustle up and you figure out how to, sell something, or you call some buddies and you say, hey, you do a convertible note or like, unsecured loan. There's lots of stuff in entrepreneurship that people don't talk about. Your spouse, hopefully they're on board.
Gotta be.
Because if they're not, it is going to be a living hell for a period of time until things do start working for you. Dating an entrepreneur, don't recommend it. If you want to see that person or you want you to be the center of their world, highly unlikely. If they're very motivated for their business, that's going to consume them for an extended period of time. Their life is going to be extremely unbalanced for 5 or 10 years. Just saddle up and be ready for it. If you want the Lambos, you want the nice house, if you want all the things that people, post on Instagram, it's going to require sacrifice and it's going to suck. And there's going to be times where you're like, that's screwed. I don't know how I'm going to make it out of this one. It's game over. I've screwed the pooch on it. And, you wake up the next day and you figure it out. That is what an entrepreneur is. It's somebody that is going to continue, like, they don't give up.
Right.
And
I'm so glad you said that. I'm so glad you put that out there, though, to let people know that, hey, if you're going to get involved with somebody who is, whether it's a female or male,
doesn't matter.
the opposite side, you better understand what that comes with. Everybody wants the toys, everybody wants the fun, everybody wants the bags, right? Want that money, but they don't want the sacrifice and what it takes to get there. Sometimes they just want that quick, easy, boom, lottery ticket,
And
which is a very small piece of it.
Fast money doesn't last, and it's only, I don't know, that's not the same, but like, it takes a long time to build something, and the faster you get it, the faster it'll leave. So if most of the people that I work with that are centimillionaires and billionaires, they had an exit on a corporation, and they had to grind their face off for 5 or 10 years before they had that large exit.
Sure.
And then they were able to take that money and go do the other things with it. And it's a season of your life.
That's right.
It doesn't have to be for forever. It's not, unless some people are crazy like me and they don't ever stop working. But like,
when is enough, Jake? When is enough?
So I look at Maslow's hierarchy of needs. Okay, so some people just focus on survival. Most of those people, they think week to week, month to month, and never make more than 50 or 100 grand a year. They're focused on survival, and I don't know if it's the chicken or the egg. We can talk about that at the end. But like, so there's that level. Right. And then you have people that they have an ego and they want to keep up with the Joneses. Okay. And that's kind of the next level. They want the nice cars. They want all these things. So they're willing to do more work to be able to keep up with that lifestyle.
Right.
It's more of a lifestyle type person. They could have as high as $1 million a year income, depending on where you live. If you're in California, you probably need that to
Right. Just
keep up with the
survive.
Joneses,
Yeah.
or New York.
Yeah, I was gonna say city.
And then there's people that are freedom. That's what they focus on. And they will do anything for the freedom, right? To be able to go and do as they please. And that requires a lot of money and resources.
Right.
And then you have people that are purpose driven. Money
make a
does not
difference.
matter to a purpose driven person.
Right.
It's a byproduct of whatever they're doing. Do you think that like Bezos or Zuckerberg or Elon care
Right.
about the money?
Right.
It's a byproduct of all of the stuff that they've done. They are focused on changing the world
Right.
in some way, whether it's malicious or not. I'll set that aside. But like that is their game.
Right.
And
I don't think you can ever say it's malicious, because in the real of it all, they don't have to do what they're doing.
no, not at all.
You know what I'm saying? And that's the thing. It's like, I tell people, you can choose to go to work, or, you don't have to go. You know what I mean? It's like a lot of people need, they can say, I get to go to work, which is a
Right.
good thing,
Yep.
type of
Great
thing. But you're right.
gratitude.
Right. Gratitude. But a lot of people today, they hate on the players that are actually trying to change the world. And they're like, oh, they're just doing it for the benefit of even more and more and more and more. There's I don't know. I could be wrong. There might be some egos to some of these people up top, but I'm going to guess that, they've changed throughout the time, because money does change people, whether you think so or not.
I think
how you allow it to affect you is huge.
I think it just exacerbates whatever you are.
True. Yeah.
So it's
Which
like,
means there's going to be a change one way or another.
Well,
People are
it
going
just
to see it.
amplifies, right?
Yeah,
So if you're a very giving person, like I can tell you, I was playing golf with a billionaire the other day,
Mhm.
and he still gives 10% of his gross income to his church.
Right.
He's done that since he was 6 years old,
Right.
right? And
And
had
he'll
his
stop.
little, lemonade stand that he had, right? So whatever values and beliefs are instilled in you early on are just exacerbated as you climb the income ladder and you have more. If you are greedy and gluttonous and like egotistical and kind of a dick,
Right.
you're probably going to be an even bigger one of those
Right.
on the other side of making a bunch of money. And I
Yeah.
know those people too,
Yeah. Unfortunately, right? You got to deal with them, because in business,
Yeah.
you're going to, you're going
and,
to
and,
cross them.
and that's the other thing. A lot of people have a hard time separating business and personal. I can love you and we can be awesome buddies and we can go, play golf or do other fun stuff together. It doesn't mean I want to work with you.
Right.
Right. And vice versa. I can be working with somebody that I have the utmost respect for, and they are fantastic at whatever they do. And I can not like them at all as a person.
Right.
Other people have a hard time doing that.
Well, I think the first one's going to be a little bit harder, because if you love somebody, you care about them, why wouldn't you do business with them?
Yeah. Well, sometimes
Because in
their
my
skill
mi-
set's not like I've got high school buddies that are great buddies,
Yeah.
and I'll go hang out with them,
Yeah.
but they're I don't know. As you climb,
But they need your coaching. They need your guidance.
I can help them. That's fine. Yeah.
You know what I mean?
But if you're the smartest person in the room, you're in the wrong room,
You're in the wrong room. Facts.
right?
Yeah.
So, and not to say I've become more and more stringent with my time.
hmm But that's happened over time.
Yes.
You know what I mean?
For sure.
And now you're in a different level.
Yeah.
And you're identifying that and saying, hey, you know what? I need to put myself in different circles.
Right.
So I can elevate myself and grow, which
Right.
not everybody wants to do. I'm in the same I'm in the same boat, same thing. But these younger generations need to know that at a sooner age,
Yes.
so they don't make all the stupid mistakes along the way. And we can prevent that just from
Yeah.
our experiences, type of thing.
Well, if they're willing to learn from other people. So that's like the fastest path to success, I would say, is get around the right people and learn from them, and then don't make their same mistakes. Because I'll tell you all the
Right.
mistakes that I made. You will too.
Yeah.
That people want you to do better than them. They want to help you miss the potholes of
That's right.
life.
That's right.
And so, if you can just accept that you don't know everything,
Mhm.
like I know very little. I know a lot about like 3 things. Outside of those 3 things, I am ignorant. And I will listen to anybody else that's an expert in
Yeah.
those areas. And I'll still listen to experts in my area.
Right.
Because
You want to get better knowledge.
I want more information, and I will change my biases if enough data is presented that I am wrong.
Right.
I'm open to change.
Yeah. That's awesome. You know what? More and more people need to be like that. Sometimes when people get to the top, sometimes when they get to a different level, they forget where they came from, and that's one of the things that I've noticed. Being even with the podcast and stuff, there's a lot of people like yourself who reach out right away. Boom, you know what? Great person, great conversation, great to have you. And I can see we're gonna have a long-term relationship, in the future. So, and there's other people where it's like, they think they're too good for it. They're too good to give their knowledge to somebody else, and it's just like, come on, be who you really are, type of person.
Well, I always like to provide all three. Okay. So again, I've been in sales my whole career. You can call me a salesman if you want to. That's okay.
Oh, I've been labeled that too. That's fine.
So I want to give you all the information where you could do it yourself. I like to provide that. So we do tons of content. You don't need to work with us. Like if you want to watch everything that I've ever done, you could do it yourself.
Right.
We do done with you. Right. So if you want somebody to hold your hand through the process, and then there's done for you. Right. And those they'll have different price tags. There's free, small amount of money, and then like a lot more money.
Right.
If you want all of it done for you.
Right.
Right.
Yeah.
But I would rather pay all of it done for me because I'm good at what I'm good.
Yeah. Right. And that's where I'm, your time, let the people that are good at what they do, go ahead and do it, And that's what I love about you. And I just want you to know that I want to say that I really look up to you because of the way you handle yourself as a person. Gary Breck is a lot like you, only in a different genre, right? He does the health stuff, and he always tells people, hey, you can go out and buy the red light bed, you can go out and buy the, the cold plunge, or you can just go ahead and get it from nature. You can step outside, you can ground, you can do the certain things. He's not doing it for the endorsements. He's not doing it for the money. Yeah, he's got to make a living. Sure, he's growing his network and everything else, but the reality is, he's giving you everything that he would give you if you paid for it. Difference is, do you want the time, or you want him just to tell you? And, I use him because he helped me and saved my life. So, good friend of mine as well. Yeah. I love him as well. His whole family, and they're all down to earth. And that's what that's what the world needs more of. Down to earth people, good people, providing help to others, not saying, hey, you can't afford me, or you can't learn from me because I'm up here and you're down here. And when you come and get in my room, then we'll talk. Nah, let's have a conversation. And that's, I've been in a situation, and that's really what's got me to write my book, is because I had so many kids that I coached throughout the years. And as they got older, now they're in college, they're getting inside out money. They're getting, they're coming to me. Hey, what do I do? What do I do? What do I do? And I never say no I'll never say no to a person. Somebody wants to call me up, ask me I'll give you what I got. You know what I'm saying? I'll reach out to the people that they're smarter than me, and I'll get you an answer, type of thing. It might take me, but I'll get it for you. But it got to the point where it's like, my time, like I'm only one of me.
Right.
So how can I do it? And that's when I said, like, hey, let me just put it in a book.
Podcast.
Podcast, and put it in a book, and, get that information. And that's what it's all about. It's about, just being somebody ordinary. You're an ordinary guy, trying to make a living, trying to feed your family. And, doing extraordinary things now, because now look at you. Not only have you done successful and you made a good bunch of wealth, but you're also using that wealth to create more and showing people how to do it as well, which I think is awesome.
Want to help people and provide value. So there's a couple paradigms that, like, my dad had, that I think probably people that are watching this, if you're a young kid, he thought you had to be evil or malicious to make a lot of money. Not true at all. Some of the nicest, kindest hearted people I've ever met are centimillionaires and billionaires. They are very good people.
Yeah.
And the other thing outside of that is, so I went on this jet. First time I flew private.
Mm-hmm.
Paid way more money than I was comfortable with at the time. My wife wanted to kill me.
Yeah.
Got on this jet, and I had this anxiety. Like, I had the least net worth of anybody that was going to be on the jet at the time. And I had this anxiety that they were going to look down on me, or like not want to talk to me, or be biggity, like you talked about.
Sure.
Coolest dudes you've ever met.
Right.
And like, you paid to be on the jet, dude.
Right.
Like, you made it. You're here. Like, you don't need, like, you're being here is enough proof for me that you're cool, and like, you got the approval. Like, you don't need to feel any lesser than anybody else here. Everybody else on the jet's worth 100M or more, but like, and they were there to give advice and help. And I did the same thing for them. And it's, some of those relationships have been awesome.
That's great.
Since then,
That's great. Yeah.
But like, I don't know, my dad and both my parents just had different preconceived notions about people that had a lot of money. Another thing I would say, if you think money is a bad thing, it's not ever going to come to you. You're going to repel money.
Right.
If you think it's evil and it's bad, or that you are being godly by being poor, God wants you to have a bunch of money so that you can help a bunch of people.
Exactly. That's all my goal. You know, right there, boom. You know, if you're a billionaire, you can help out a lot of
That's
people.
right.
A lot of people. You know, so you know, well, I'm not starving. You know, so the more I can help, the better, right?
Yeah,
Type
well,
of
just
thing.
more value. That's so my boy's young, and I try not to, you know, perpetuate the same types of beliefs. We'll see a price tag on stuff, and there's a reaction to that, and I'm like, I don't think about it that way. It drives me.
Mhm.
Like, how can I afford that? Is the question that I ask, and then also, um, you know, how can I create more value? You talked about, you know, you're only one of you.
Right.
There's 4 different types of leverage. One of those is content, right? So your book and your podcast, you do this one time, you write the book one time.
Right.
How many lives can you change with that?
That's right.
Right.
That's right.
And so, you know, I would challenge people to think about those things. Like, what can you do one time that'll continue to provide value over a longer period of time?
Exactly.
I think on your deal, you had courses,
That's right.
right?
Yeah.
So that's another one.
Yep. Facts. Yeah, that's good. And you know what? You should never be afraid of doing the things that you want to do getting there. I'll tell you a quick story of my dad. When I bought my first Lambo, I'll never forget, paid cash for it, drove it off the table, went home, called my dad up in New York. I was like, Dad, I just did something stupid. I was in tears. I was crying. This was one of those moments, right? And he's like, what do you mean? What do you mean? I was like, I bought this Lambo and shit. And he's like, you know, I'm proud of you, son. Like, that's good. And I go, I'm smarter than that.
Yeah.
I could have bought a property. It's been bringing me money, you know, and everything else. Like, didn't even want it after I had it. You know what I'm saying? Type of things like that doesn't define who I am as a person. You know, it's a thing, it's a milestone. It was something that I had a goal that I wanted to achieve, but it doesn't define me, you know, who I am. Both cars are going to get me to work, you know, type of thing. I'd rather have the money to be able to do more stuff with it, which is cool. I think you're the same type of guy.
I am, you know, so a few things on that. I would have bought a car wash. And then use the money off the car wash to finance the lease payments on the Lambo.
That's right.
That way you get the depreciation.
That's
on
what
the
I do
tax
now.
benefits,
100%.
which is great. But second to that, you don't get like when you played sports as a kid and you won something, they gave you a trophy.
That's right.
Business owners
now you don't have to win to get a trophy. In the world.
Yeah,
you get a participation trophy.
We can go down another rabbit hole with that.
That's another conversation.
My point of that is if you have milestones and things that you win in business, you get to buy those trophies.
That's
right. So like Kevin O'Leary has a watch.
That's right.
He buys a watch every time he has a milestone in business, and he can point to that watch and say, "That was when I did this."
That's exactly right.
So the Lambo, you know, you hopefully are using the watch and the nicer things to get around nicer people and participate in certain communities and do more business. That's how I think about leveraging those assets. It's not just, you know, for me to use. It's an access. It's a way to get into a community of people. But I think that those are important. Like, I find myself always looking at the top of the mountain. Like, I have very, very high goals for where I want to take what we're doing. And like my team will be like, but we just did like this. Like, so we're the fastest growing RIA in the world. Went from 0 to $1 billion in 1 year.
Right. It's amazing. Congrats.
Thank you.
Yeah.
I'm like, on to the next thing.
We're going to do forward next year.
Well, yeah. So just things like that. Sometimes you need to sit back and smell the roses a little bit and cherish those moments and look around and enjoy some of your accomplishments. And I think buying a token or something nice for yourself occasionally as a memorial for that thing is a cool way to do that as a business owner, because you don't get trophies in life,
right? No,
like you do in sports.
No, that's well said. Yeah, it's 100% what it is. And it's funny when you said about smelling the roses, because my father says that, you know, slow down, you got time to smell the roses, and I'd be like, no, I just want to plant a lot more so more people could smell them.
Always planting more trees, you know.
Exactly.
But I think it's just you're type A person.
Yeah,
you know what I mean.
Right.
Like strong-willed, you're always looking at the next thing. I'm trying to be better about that, because I'll mount one peak and I'm looking at the next one. I don't take any time to like look back at what we've accomplished.
Well, Jake, I really appreciate listening. You gave in a lot of gold nuggets today. I hope the viewers actually can just pull one of those out and actually, you know, put to rest. Anything left you want to say to the viewers out there? Give them one more piece of knowledge.
I mean, I gave you a lot of them.
You sure did. You sure did.
We're about to. Those that are positioned well.
You know what? Let's talk about it. Let's talk about some elder guy, maybe somebody that's in his 50s or 60s or even 70s.
Okay.
But doesn't have the wealth, and seeing all this younger generation, these people moving through a lot easier in life. You know, what could you say to them? Because their life's not over yet.
No.
You know, and there's still time.
We can talk about that. So our
Yeah.
average client's somewhere between 45 and 70.
There you go.
They're not the young people with the crypto. Okay. There are people that understand this asset class or are learning about it very quickly to be able to get a retirement and put themselves in a position to enjoy the last bit of their life. Maybe they missed other opportunities and didn't take a swing at things. Maybe they just worked that 9 to 5 and got the pension, and that's what they were told to do. And they wake up one day and they realize, like, shit, I've spent most of my life doing this. Like, that's what my dad did before he passed away, but he was too old to even enjoy retirement. He was starting to hurt and couldn't play golf anymore. And so I just would challenge you to look at the world from a different perspective. A small amount of money today invested in the right things can set you up in ways that you can't even fathom. And that's, kind of what I was going to go down the road, like where we're about to go and the transition that's about to happen with digital assets, if you're invested in the right things, is going to completely change people's lives.
Right.
Sometimes for the better, sometimes for the worse, if you don't know what to do with it. But there's an opportunity at hand now that's not going to exist. I tried to explain this to a couple of my business mentors and people I've had dinner with, and I'm like, this opportunity is once in a lifetime. And I know people say that, and people that are older than me are like, there's going to be a lot of once in a lifetime opportunities.
Sure.
I do not know how to impress upon you. I am young and maybe I'm naive. This opportunity will not come around for another 200, 500,000 years for how the currency system and everything is changing right now under your feet without you even realizing it. So if you're not paying attention to this, I would highly recommend that you start doing it and do some research. Look at XRP, look at XLM, look at HBAR, look at anything to do with financial payment systems and infrastructure for blockchain, and educate yourself. I'm not saying to make the investment, but there's a big opportunity for those that are in the right things before everything kind of unwinds here with Tether, and 99% of crypto goes to zero, and the ones that survive are going to make people a lot of money.
Well, there you have it, folks. You heard it right there from Jake himself. Don't be scared. Don't be afraid. Take the risk. Do the homework. He's giving you the blueprint, okay? And we give these blueprints all the time. Make sure that you follow them. Put a little action into it. And as your boy Wham Bam always says, if your life was a movie, would it be worth watching? If the answer is no, stop being ordinary and start being extraordinary. Till next Wednesday, baby. Stay positive and keep testing negative.